Hey everyone, welcome. That was the closing bell for June 11th, Tuesday. We can see that we continue to chop. It is a positive day at 0.25% up, but really we're still inside this box. We didn't really move that much. We're not really going anywhere. So normally I would be saying, well, chopping sideways, don't have a good sense of directionality, but a couple of really interesting things happened. First, let's take a look at the end of the day. Did we get a surge? A little bit of a surge. In terms of volume, though, it wasn't a huge amount. You can see that this last bar right here was 211,000. And if we look at yesterday, the last bar was 818,000. So it's actually a lot more quiet than yesterday. We did sort of start right at 10 o'clock trending upwards, driving this market up. But what's really interesting is something we haven't looked at in a while, CPC. We're way down here at 0.68. So there's a lot of call buying inside of this market. People are really enthusiastic, and that is a time for us to start getting pessimistic. So I'm starting to get really wary. I did say that I was leaning towards retracing back to the bottom of the box, and that seeing that CPC just gives me that feeling that we're probably going to start tracing back into the box. Not necessarily immediately. The CPC, we don't necessarily expect it to snap back the very next day, but soon. So let's take a look, actually. Why not? I haven't done this. So the last few times we broke below this 80 level, normally 70. We used to say 70, but we haven't hit 70 in so long. I adjusted that to 80. So let's just take a look at a few of these. Like, what was this one? February 16th. That's a really unusual bar right there. So let's take a look at February 16th. Is this the same? Nope. Maybe I'll just look over here. SPY. February 16th. Right here. Okay. And then we headed down just for a couple of days, but we did head down. And then and obviously this would be, it's not like we went way down. If we drew a small box, it would have just gone back towards the bottom of the box. So that's all we're talking about right here in the SPY, is that we might just start retracing towards the bottom of the box, towards that EMA 20, which would be maybe 2/3 of the way down in the box, not necessarily breaking down. The CPC is a very short-term indicator. Let's pick a couple other dates. What was this? May 3rd, May 21st. So if I look at May 3rd, we actually, that one didn't pan out. It's just continued upwards. And then May 21st, this one definitely panned out. This one to a huge downward bar and then continued on after a little bit of a sideways motion and then continued on. And that was our pullback. And then we went back up. So, 2 out of the 3 that we looked at, it did work out. And it is a very short-term indicator. So maybe over the next couple of days, we start pulling back down. So another reason why I'm leaning towards moving back down and actually maybe a larger pullback is because of surveys. So when we survey things like consumer sentiment, market sentiment, it's done by survey. They just take some random people and ask them, well, what do you think? How do you feel? It's sort of like we also have CEO surveys, so to survey the economy. But in terms of the market, the ones that we want to survey is just the average person who doesn't even necessarily know anything about the stock market, doesn't even necessarily own any stocks. So you just survey them. How do you feel about the stock market? How do you feel like it's going? Well, it's at a very high level right now. People are very positive on the stock market, especially about after NVIDIA. Today, we also had Apple. Now look at that bar. Wow, I didn't realize they'd gone up that far. So this is definitely parabolic. This is not something want to chase into, or it's not even necessarily something that I would want to short, but I would watch very carefully. So if we start breaking up or breaking down below this, that's going to be significant levels. After a bar like this, we might float a little higher, and then we will establish a range. And usually it's defined by that huge bar right here. I think maybe NVIDIA did the same thing. Whoa. I don't know. That might be some error, data error. I don't think that is accurate. Usually we see it after earnings potentially, but Apple announced AI, that they're integrating AI into their next release and into all of their Mac and their iPad and their iPhone products. And obviously investors took that as a very positive sign. This is a very over-enthusiastic type of movement. And it's carrying over, in my opinion, into the overall sentiment in the market. We have NVIDIA reaching new highs. It's becoming challenging for this number 2 spot in terms of, I don't know, after Apple did this today, I don't know, maybe Apple overtook them for the number 2 spot again. But in any case, we got these big companies that are doing really, really well and that are very, very visible. And so the average person feels really good about the stock market. The problem is they're very tech centric. It's not the whole market. And so we're just being propped up by these little legs that are just holding up the entire structure. If we look at our momentum, I'm sure you will see that we are not above the 50% level. Yeah, see right here, the S&P, very few sectors have over half of their stocks above the moving average, and the overall index definitely does not. We were in this situation right before we had that pullback, and I started talking about this. And then after the pullback, we moved up to slightly above 50. So we moved basically just barely above 50, and now we're pulling back down. So what did I say back here? I say we pulled back to 50, but that probably isn't enough, because usually when we come up, we go down to in the 10s or about 20. Okay. So this looks like we might be moving down for that second leg, and that will represent another pullback in the markets. And as I said right here, the MA50 is not that far away. And so this time I would expect it most likely to move even further than the MA50, MA90. It might be enough. That would just be a 5% correction, that MA90. But it does feel like there's a higher probability that we might actually make it to that 10 to 15% this time around. So we'll see. I might be calling this too early, but all I'm saying is that I'm seeing signs of weakness. So there was something else. There was something else that I was looking at. So our momentum levels, I might as well look at RSP. Yeah, you see that RSP, we had that pullback, and I said that, hey, our RSP was only at the MA50 when we're at all-time highs, and the SPY were at it again. SPY's all-time highs, and our RSP were actually just below that MA50. It's really looking weak, and we could break back down over here. This time, we don't have that MA90 to backstop us on the RSP. We bounced off of that MA90 last time, and this time we're already there. If it breaks down, it's going to break down. And the best that we have is this horizontal level, which is coinciding with that MA150. But how strong is that? I don't know. Let's take a look at our volume profile. Yeah, not that strong, unfortunately. It's the area of strength that we have is a little bit in between the MA150 and MA200. So we might make it all the way down, because this MA200 could come up to this orange level by the time we break. And so it's looking like this is the more likely region. Just no matter what I look at, it just looks like this is more likely. So ahead of tomorrow, we have CPI, we have FOMC, and then Powell speaking. Most likely, we are not going to get the news. We're not going to get amazingly positive news. We're not going to get a rate cut. We're not going to hear Powell say that everything is super wonderful and great. and that might start to take steam out of the market, and we'll start pulling back down. Now, again, not necessarily a crash, maybe just down to the EMA 20 or the bottom of this box. But if we do break, then we do have the potential of going all the way down to the MA 200. Too early to say. I'm just seeing signs that it is more likely than it was just a couple of days ago. So we want to be aware of that, be prepared. If I was going to lean my portfolio outside of neutral, it would actually be to the downside right now and not to the upside. So, and a few days ago, it was different. Right? If I was going to lean, I was going to lean upwards. So now we're leaning downwards, but not yet, not until after tomorrow, until we actually get the data. So just be prepared. Just be prepared that we might start leaning to the downside just because that's how everything is looking. Let's take a quick look at let's see what TLT did. Then we'll look at our sectors, and then that'll be it. TLT came back up to the top of the channel. So, but yeah, like I said this morning, we came down a little too aggressively. Huge gap down, another gap down. And so today we're just undoing some of that. That doesn't change anything about how we feel. So we'll just keep on hanging on to those 3 legged in positions. You can see that a couple of them look like they're slightly negative now, but overall it's still making money. Okay. So 67 minus 29 minus 2.5, that's like 30, $35. So it's still making money, but we're going to expect this to come, maybe challenge this horizontal, but realistically, we're in the 1 to 2 week range. It should be down here. So let's take a look at our sectors, and then that'll be it. We're just curious to see, where did money move around today? Apple. So I wouldn't be surprised tech. So Apple up that much, then certainly tech would be up. But again, that would be a false signal, in my opinion. SMH sideways. Let me see. Let's do it this way. So XLK, yeah, did the best. TLT recovered. QQQ dragged up by XLK. Retail, 0.38%. That's what we call just barely outside of random. So flat on the SPY is 0%, and everything else is down. So really only tech went upwards. So this is not a strong movement upwards at all. And once we start losing enthusiasm, that will bleed out of tech pretty quickly. And same with retail. These are risk type of sectors. So they'll lose the money first once we see a downturn. So everything happened on low volume. And that means institutions were not the ones driving this up. Institutions are the ones getting crazy and feverish over Apple and NVIDIA. And once they come back into the markets, they're probably going to be taking profits, because what happened? We drove them so high. But if I wish I could erase, let's see, or have a different source, a charting source. Let's go to bar chart. Let's see if I can find NVIDIA. Okay, and go to a bar chart. I guess they show it also. Interesting. Well, we'll find out. We'll find out. Was this today? Oh, this is a year. Let's go on to a 6 month. Yeah, yesterday. I don't know. That just looks really weird to me. I don't remember hearing or seeing this yesterday. So I'm just going to ignore that for now. But NVIDIA, Apple just trading up like this. Most likely institutions are going to come in looking to take profits, because this is a huge movement and a huge deviation from those EMA 8 levels. So I would expect to see profit taking pretty soon. And if that freaks out the markets, then we could be moving downwards. Okay. So yeah, that's about it. So for now, just to kind of take a step back and put everything into perspective. Yes, we're starting to see more negative sentiment or not negative sentiment, but negative forces in the markets. But for now, that just means pull back to the EMA 20. It may be down to the bottom of the box. It doesn't mean a break of the box. Doesn't mean a break of the MA 50 or MA 90 yet. It could develop into that. But for now, we're just talking about, hey, the next few days, we're just going to expect that to move downwards and retrace to the EMA 20 or to the bottom of this box. And that's it for today. I will see you guys tomorrow morning, and we'll see how that CPI number prints. All right, have a great day.